I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a guy who was a favorite who came on here. He's from Mexico. I'm talking about Hugo Salinas Price. He's back on. Mr. Salinas Price, thank you for joining us today on USAWatchdog.com.
It's a pleasure to be with you, Greg.
Well, of course, a little bit more about your bio so people understand who I'm talking to. You started you were the founder of the big, huge retail chain, basically the Walmart of Mexico, the Electra chain.
Not quite.
Well, you've been a big chain. You are a Mexican magnate. You're an investor. You're a philanthropist. You're a big-time guy. You rub shoulders with a lot of important people in the world, and you're a brilliant guy. And I'll tell you, I read your piece. This is why I booked you. It took a while to get you booked on, but here, I read your piece in the beginning of August. You were talking about, will China play the gold card? And you were talking about devaluating currencies. And lo and behold, a couple of weeks later, China devalued their currency here this past week, last week, I should say, in a big way.
It's just the beginning.
So tell me what you think is going on with the currency.
Well, evidently, they are an export-led economy, according to what experts say. And they need to boost their exports. They're failing. Their economy is rather stagnant, and they have a lot of people there, and they can't afford political unrest or social unrest, and so they have to do something to get those people to work. That's 1.3 billion people. That's a huge number of people, and you've got to keep them busy. Now, how do they do that? They've decided that they are going to be exporters. They've forgotten about agriculture, I think, and they're invading their countryside with buildings and phantom cities that have no residents. And the Chinese people have invested in real estate as their savings. That's in a bubble, because there's nobody in those buildings. They're unoccupied. So the Chinese have to do something. They feel that they urgently need to do something to get out of the funk they're in. And the classic way to do that is to devalue your currency. And by the way, I owe this idea, my attention was drawn to it by Alasdair MacLeod, who writes at Gold Money, which is owned by Jim Turk, who's on your program recently, and he's already said everything that has to be said, really.
Well, you laid out...
Good friend of mine for many years, and he's very knowledgeable. And Alasdair MacLeod wrote 2 articles on that. For instance, he wrote China's 1929 moment. That, in other words, they're on the verge of a breakdown. And then he wrote another one about credit deflation and gold on the Gold Money site, goldmoney.com. And so I got those ideas from Alasdair MacLeod, and then it occurred to me to write an article explaining just how it would, why raising the price of gold in yuan in China would work for China, and I think it would work. They haven't used it so far. They're only devaluing their currency with regard to the dollar, but that also shows you something that I think is very significant. This is a breakdown of the gentleman's agreement on how the international monetary system works. In other words, if a little country devalues, well, that's not unexpected. Mexico is devaluing. We've gone down from 11 not long ago. Now we're down at 16. So we're devaluing, and we're devaluing every day, going down a little bit more every day. I think today we're at 16.40, 16.33 to the dollar. So, but when China does this, oh boy, that is very serious. Already the United States is receiving huge quantities of Chinese goods, has an enormous trade deficit with China. And now they devalue, that's going to get worse. It's going to get worse for the states. Now these things lead, there's going to have to be, I think, a corresponding move on the part of the United States. And what was done in the 30s when one country devalued? Well, the importers didn't want all those cheap goods coming in, so they would raise tariffs. And that's, I think, what will happen again. In other words, we're seeing this is going to be the beginning of a breakdown in international trade. I think the result of that, because is the United States just going to stand by while China continues to devalue? Because, they've only devalued something like, 10% overall, or not even that. It doesn't even amount to, I think it amounts to about 8%. That's not going to help the Chinese much. When you have a devaluation, it's got to be about 40%. Then it really has teeth in it. But 8% is just the beginning. I think they're going to go on. I think they will continue to devalue. Now, what I thought the Chinese might do, they've done devalued, but not the way I thought. I thought that they would not devalue the yuan against the dollar. They just raise the price of gold inside China. They haven't done that. That would be, I think, a more effective measure for them, because it would provide more liquidity to their financial system to devalue internally against gold. I think that would boost their economy more than devaluing against the dollar, but they haven't chosen to do that
yet.
Evidently. Yet. Maybe they will do so in the future.
Do you think the U.S. will also make a big devaluation move to counter the Chinese?
No, although that would... How can the United States can't devalue the dollar? The only way to devalue the dollar is to raise the price of gold. It can't devalue the dollar. It can't be done. There was years ago...
Wait. How come? Why can't they devalue the dollar by... Is there no room to devalue the dollar, or why they can't do it for political reasons, or they just physically can't do it?
Well, I just think it's not possible to do it. It's the reserve currency, and you can't just say, well, now my money's worth less. The markets decide these things.
So China has us in a spot.
So the United States cannot devalue the dollar except against gold. It's the only way to devalue the dollar. Is to go against gold. That would devalue the dollar, and they haven't wanted to do that. The U.S. began to fight that devaluation of the dollar back in 2011?
Correct.
The price of the dollar was, as Keith Weiner has pointed out, at that time the price of the dollar was 16 milligrams of gold. That was the price of the dollar. And now the price of the dollar is around 26 milligrams of gold. It's gone up in terms of gold. In other words, what we see isn't falling price of gold, but it's really a rising gold price of the dollar. I don't know if I'm clear or not.
Yes, in other words, the dollar is rising against gold. In other words, you could buy gold for $1,900 an ounce in 2011, and now you can buy it for $1,100 or so.
That's right.
Right now.
So the dollar is worth more in gold today. But that's only a transitory fluke. Its eventual destination of the dollar is zero. I mean, the dollar is going to be destroyed eventually.
So what do you think the United States' next move is going to be against China? You're saying they can't revalue a world reserve currency unless they do it against gold. Do you think the United States may revalue against gold or not? Or is that out of the question?
Well, there's going to be more tension between the United States and China. I don't know how they're going to resolve this. Maybe, I can't imagine it. The only way that I can see that the United States can defend itself from further inroads of cheap Chinese goods would be to raise tariffs. And that also is a no-no, because, well, you can't be the reserve currency of the world and say, well, we can't receive your goods, It's contradictory. So there's a big problem coming up. This breakdown. It's breakdown coming down. This whole fiat money circus that the world has been on since 1971 is coming to a head. And I see it in many comments from diverse people. The problems are just mounting up. You have the problem in Europe. I mean, you have, Greg, see me if I get off the subject a bit. Look, you have Greece with 11 million people, and they're going to wind up, if they get this next bailout, with something over $400 billion of debt. Now divide $400 billion. How can 11 million people work off a debt of $400 billion? I mean, it just can't be done. They're just in dreamland. These people in the euro, running the euro.
Have you ever seen a time like this in your life? I mean, is this a big signal, this reevaluation, this, you think you brought up and you said it was desperate or a panic or they were, they seemed panicked to do this, the Chinese. And is this signaling a much bigger problem in the world that you see from your vantage point?
Oh, the world's never been in such a plight. The world has never gotten into such a situation. Never. I'd like to mention that the world before World War II, World War I, the world before war, 100 years ago, international trade paid for itself. There were no imbalances. There could not be imbalances because goods imported were paid for by goods exported. And what you imported, you were paying for it with what you exported. That's no longer the case. United States receives goods from China and sends dollars. And they can send any amount of dollars. And that's what's happened. There is no longer balanced trade in the world. There's unbalances that's built into the system. And what that has led up to is this present chaos. And I don't know. This is going to be a very, very ugly. It's going to come apart in a very ugly way, sooner or later.
Well, I'll tell you, you wrote your piece in the early part of August talking about revaluing gold. It didn't quite happen the way you said, but you know that there was going to be some revaluation of currency. And surprise, which I thought is pretty prophetic, that you identified this problem and China moved a few weeks later. And I want to move on to something you wrote about in June after our interview in May, and you talked about, and this is about the coming liquidation. Your piece was titled "The Coming Liquidation," which is on your website, which is in English and Spanish, might I add, so it's lovely for anybody in either of those languages can read all about this. And your basic point was, we had a lot of debt in 2008, and we have expanded the debt by an enormous amount in the tens of trillions of dollars. Right. And you identified this, and I'm just people can read this for more detail, but I'm just identifying your a few bullet points here. Is that they want to stop this deluge of liquidation. They know there's going to be a deluge of this bond liquidation. That's what they really did. They didn't print money, they printed bonds, but they'll have to print money to liquidate. So can you tell me about why they're trying to stop the, quote, deluge of liquidation in your terms, end quote?
Well, good heavens. With all this debt liquidation means that the owners of the debt get wiped out. Yes, somebody owns all that debt. And all those people or individuals or central banks that own that debt, when it's liquidated, and it can't be liquidated, is going to go into default, then that means a loss for all those holders of debt. And so all these assets that have gone up because the bonds are overpriced because the interest rate is still low. So people think they have made billions of dollars or euros or whatever currency you want. And it's all going to come to nothing because they can't be liquidated. The debtors cannot pay. The assets do not support the debt, in other words.
That's what's going on in Greece. They're just rolling the debt over and making it bigger, trying to pretend that someday, somehow, all this debt will be good.
That's just crazy.
I mean, is that what you're saying? That based on the whole world, Greece is really the whole world. They just keep adding to the debt, adding to the debt.
raises the whole world, exactly. We're not in any better condition. The whole world is huge debt, which is unpayable. It's unsustainable. The assets behind it are deficient, are not performing, and can't perform. And so this thing is like a cloud. You know, when the cloud is up in the sky and you see the thunder up there, you see the thunder cloud up there, but it's still up there. But when it begins to rain, well, then you have a flood. And it's going to, all that debt is going to come down like a cloud burst. A cloud burst. We're going to be drowning in paper, in worthless paper.
And they'll have to liquidate the bonds by printing the money.
Well, I don't know about that.
Or will they just default on the bonds?
To print money, you have to have a bond. There has to be the Fed buys a bond, and then it creates money that way, right?
Right.
It has to. So how can no? You can't liquidate with paper.
So they just have to keep rolling these over until they're just no good, is what I guess that was the point of your article, that you talked about rolling over the debt. So they just keep rolling over the bonds in a bigger bond and a bigger ball of bonds.
The debt gets ever bigger. The debt gets ever bigger. They rolled over the debt in 2008, and now we haven't solved anything. Nothing has been solved. There's no stability. We continue to incur more debt. Now the debt overhang on the world is grown, I don't know, about 40% in the last 8 years.
Since 2008.
Yeah, 7 years. So, I don't see a very. I think the world is going to have an epileptic fit. You know, an epileptic fit.
You think it's going to be the?
I mean, it's just something terrible is going to happen. Maybe, good heavens, I don't want to even think of a war. War is one way to get rid of death, but you could get rid of the states at the same time. I mean, the next war is not going to be fought in Europe. I want to tell you that. You know, it seems to me, maybe we're getting off subject here, but I think this is important to say. It seems to me that the American strategists who are running the foreign policy of the United States are hawkish. They think in terms of war. And they think that by pushing NATO to get into a war with Russia, that they can break down Russia, and which remains a country that does not want to submit to the international order. In other words, it doesn't want to submit to what the United States wants as the international order, which is domination. And so, if these little men, because they are all little men, Greg, these U.S. strategists are not big men, they're little men. They think that they're going to push Russia around, and that's a big mistake. Russia is not going to be pushed around. And if there is a war with NATO, you know what Putin is going to say? Look, you United States are behind this, and you are our enemy, not NATO. You are the enemy, and here we go. Here we go.
And the war will be fought over here.
It's going to be fought in the United States, right? Not fought. It's going to be vaporized in the States. That's what I'm afraid of. I mean, coming back to these little people, there's Mr. Trump. Excuse me for changing the subject again.
Well, I want to ask you about that anyway.
This guy is really popular because he's saying a lot of things that Americans have been thinking. And he's telling them that he's thinking the same way. And the American people are responding positively to that, because there are a lot of things that have not been said that should be said. And Trump is saying some of those things. And the American people are responding positively to that. But there's another problem with this. He speaks his mind right off the bat. And that is very dangerous. As a politician, you have to be careful what you say. It's not just being politically correct. It's being prudent. You have to be prudent in what you said. He talked about building a wall with Mexico. I mean, this is ridiculous.
He says he's going to get Mexico to pay for it.
And Mexico is going to pay for it. I mean, this is absolute lunacy. So, Mr. Trump, I admire your sincerity and your outspokenness, but be careful with what you say. You have to be a lot more careful. Again, he expressed a hawkish attitude towards, towards Iran?
In the Middle East, the whole. Yeah.
Didn't he say something like that? That's no way to lead a country, just with impulses like that. Can't be impulsive. Mr. Putin is not an impulsive man. He's a very thoughtful man. And the United States needs a very thoughtful man indeed. And Trump is okay. I like him. But he's too outspoken and he doesn't think too clearly about these things.
Hey, I think that's a good appraisal, not prudent. That Putin is prudent. If anything, he's very prudent.
Yes.
One last question. Do you think this, I'm going to come back to the economy. Do you think that do you think we're going to have a tough fall this fall, that we're going to have do you think we make it out of 2015 without some sort of real trouble economically?
I have a feeling that we may be near a bottom in gold. And I also have this feeling, Greg, that when we see a rising trend of gold, that will be the last rising trend that we see, because it's going to lead to a new monetary order in the world. In other words, we've seen a rise of gold up to 1900 and then descent to 1,100 or a little below. When it starts rising again, it's going to rise a heck of a lot, and that will be the last rise of the price of gold, because after that comes a new monetary order. I don't think the world can wait, or that there will be any more time for further declines in the price of gold and speculations. This is the last gasp for gold.
And you're saying watch the gold market. When you start seeing the gold market start working its way up,
that will be leading up to a new world order. I think so. That's just my intuition, of course.
Hugo Salinas Price, you're a smart guy. We all like your intuition and your brain, my friend. You're a smart guy. We really appreciate you coming on USAWatchdog.com, and I'll link to your website. What's your website called again?
Well, it's in Spanish, but we have a section in English. Is Plata.
Plata, that's right.
Plata.com.mx.
Plata.com MX, right?
Great to talk with you.
Oh, thank you very much for joining us. I'll put a link to Plata.com MX on the site, and people can see some of your great work, some of your brilliant articles. Thank you very much. Hugo Salinas Price from Mexico.
Thanks, Greg. Bye.